Hello and welcome, everyone. Thank you so much for joining our June Climate Action Network event. This event today is being presented by Teresa Lopez and focuses on green energy money. My name is Lorenzo Garcilaso, and as part of the Climate Action Network, I'll be moderating today's session. Just a quick note, this session will be recorded and is being streamed on StreamYard, The World, and EXP YouTube. If you have questions throughout the session, go ahead and ask them here. Before I introduce Teresa, though, a quick lowdown and shout out to the EXP Climate Action Network. For those who don't know, EXP CAN, our group launched in July of 2022, and we currently have 423 members in just 11 months. So that's pretty incredible in such a short amount of time. We are a community of EXP agents, staff, and partners who are enthusiastic about caring for the environment, and our goal is to provide a space to network, educate, collaborate, and inspire climate action on all levels. When you join our EXP CAN team, we have opportunities in leadership, graphic design, content creation, event coordination, project management, green buildings, sustainability, corporate governance, and a lot more. Our mission is to help propel eXp Realty to become a global leader in sustainability and climate action. As I mentioned before, we encourage you to type in your questions, and we'll save about 10 to 15 minutes in the end for Teresa to answer as many as she can. Teresa Lopez, our guest presenter today, is an inspiration, an example of blending passion, caring, and commitment to our environment and helping others, and so much more, and I'll let her tell you. With that said, thank you so much, Teresa, for joining us today. I would like to ask you, why are we talking about this today, and why do we want to do green better?
Well, currently and historically, there's been no data or information for real estate agents to be able to engage in the green space market because there's been a low inventory. So when you go to get your green designation, you have nowhere to go with it. So what we're offering here is an opportunity to green up America in your region and to bring community support and economic tools to your communities to be able to enjoy energy independence, interdependence, and financial freedom.
Absolutely. Well, then in that case, what is one message you hope people walk away with from our topic today?
That you can take these tools and utilize and mobilize to be able to green up your communities and to engage with the real estate market in a new way that covers the economic. The economics are the key driver, guys. And nobody, people, climate change and tree hugging and all that is secondary to the economics. And we've proven over and over for the last 20 years that it is economically viable and is actually a better choice given the choices we have today and seeing what's happening down the pike. I mean, it's a real deal and no one really believed it until now. So.
Well, I'm so excited to be able to hear more and then to also be picking your brain a little bit at the end. So please, Teresa, take us away into a great journey of green.
Thank you. Well, I look forward to this. And thanks so much for inviting me and for all of you joining us today. And it's a summer solstice, so it's a very auspicious time to be covering this information. And I'll try, this is a very jam-packed intro to the whole green economic story and all the pieces that are relevant to you and your market. So I hope that you get a lot out of it, and let's go. You ready? Let's start. Okay. So this is a Financing, Value, and Marketing High Performance Home. It's a green economics webinar series. This is the first one. And I'll show you where to go to find more information. I'm a national licensed mortgage broker and banker. And I work with different banks, and I do green economic development. And you can find me at greenenergy.money. That's the URL, guys. There's no .com or net. Okay, next. Thanks. The problems we saw. By the way, I've been doing this for 25 years and in the green space since 1998. So I've covered a lot of territories from Boulder, Colorado to Austin, Texas to Minnesota. I have done a few projects up in your region, but it has been quite some time. So I'm excited to start, the conversation with the community there. So the problems we solve is we have a unique opportunity. We have a green appraisal panel that's national. So when a client comes, or a realtor or a builder comes and they need a green appraisal, we can activate our appraisal management company, which is in all 50 states. And we provide the training and the toolbox for the appraisers to be able to do this in a very streamlined process that's been accepted by Fannie Mae, Freddie Mac, FHA. I've been the whole gamut for many, many years in producing and generating this kind of data and information. We also, specialize in green lending. So we have a whole network of lenders nationwide and different people that we work with to facilitate construction development loans, everything from commercial, multifamily to single family development, land, and solutions we offer. Marketing as education is my personal passion, is to bring this information to the communities around the country, to be able to train realtors, builders, sales, and lending teams. So I can help you to facilitate your market plan, your business plan, as well as the other pieces of the story. We also provide quality assurance and risk performance for lenders. So we are able to analyze the data and feed back to them how they're doing with their energy programs and whether it's a market failure or it's supporting the market as we speak. Next, please. So I know you guys probably are aware of the loan limits. I always like to cover this because this is very relevant to your market. I think your loan limits, you're in the high balance market, right, Lorenzo? What's
yes, I do believe so.
Your Fannie Mae loan limits probably $1 million, right? Or eight.
For that one, I don't want to give any exact figures. I'm still a new agent myself.
Depends on what county it's in. Yeah, some counties are. So anyway, all the loan limits jumped up considerably. I want to say too, on the FHA program, this one right here, this is a great one for the lower to mid-income folks out there, and we do offer a down payment assistance program with no money down. So for those that qualify under that program, it doesn't couple with the energy retrofit programs, but it's great to get them in a home and get them into the purchase market, and then they can green up the home, and stage it at a later date. So that's important information for you guys to know. Next, please. Next, please. Okay. Okay. So you may or may not be aware of the Inflation Reduction Act. This is under the new the Biden administration. This was rolled out in January. Actually, the IRA 45L builder tax credit has been around, but they reiterated it and they extended the timeline on it. So now these are good, I think, through 2032. You get a $2,000 Energy Star and a $2,500 or $5,000 for Net Zero Ready through the DOE. So builders qualify for that program. On the consumer side, this is what they qualify for. Okay, so on the consumer side, you can get rebates. You can get, if your income is below the medium income, you can get up to $14,000 in an actual cash credit from the IRS. And then there's a medium income. If you make the medium income, you get $7,000. It's kind of confusing. I can go over this this is kind of a high strokes today. If you're above the medium income limit, you only get $2,000, but you also get your 30% solar tax credit. So the solar tax credit, electric vehicles, that's what EV stands for, are getting a 30% tax credit, whereas the building envelope, which is kind of backwards in my world, only gives you $2,000, but you need to make energy or save energy before you make energy. So I'm going to go over that principle in just a minute. Next, please. So the Realtor Builder Purchase Retrofit opportunity. So there are several programs in the marketplace today where people, and I'm going to show you a case study that we did a purchase on a home and we added another $300,000 in renovations, and we were able to do a one-time close on this program. So the FHA will allow, the limited program allows up to $35,000 in retrofits on your closing. The standard will allow whatever the cost of construction is, and against the acquisition price. The Fannie Mae Homestyle and Freddie Mac choice will go to 97% loan to value, and they also will allow you to use the energy credits, and you can build only 50%. So if the home is worth 300,000, you're only allowed to put 300,000 into it. So there's different rules, I guess, is what I'm trying to accomplish here in the story. So purchase and retrofit at the point of sale is where you would be able to do this. The downside to this program, guys, as a real estate agent, is you've got to have your bids in place. You've got to have boots on the ground, a contractor lined up to get approved. So there's a little bit more timeline involved in this kind of strategy than just buying the home and fixing it up and then refinancing it, which is actually a better opportunity in today's market because interest rates we know are going to come back down again. There's other ways to finance, the local bank credit loan programs, so you can get a home equity line of credit after you purchase, of course, and construction permanent loans. So if you're building, there's a ratio. If you're building more than 50% of the value, so if the value is 300 and you're putting in 500,000 as an example, it's better to do a one-time or two-time close rather than do this program. And then there's also utility financing options. I haven't dove into your region yet, but I'm happy to do that. I'm hoping Lorenzo will help champion that through the climate change section, our community, so that we can get really clear about what the rebates are and how to package this to take it to consumer markets. You can literally green up an entire neighborhood. And then what do you have? You have green inventory now. You have resales that you can sell on a green market. So I hate to be the bearer of bad news, but the reality for you guys is you've got to create your own market. And I'm here to help you do that next, because there just aren't enough builders or inventory for current climate change that are for that type of thing for us to engage yet. So I wanted to introduce you to the language of the brown discount and the green premium appraisal valuation. So basically, brown discounts are what's considered the condition of the property on the appraisal, the C rating. There's a quality of construction, a C rating, and then there's the energy efficiency line item that's on the UAR, but nobody ever uses it. So we teach the appraisers how to actually put a green premium on the property. We're getting a value of anywhere from 5 to 11% with an 8% average. In other words, for the homes that are conventional, these homes are appraising for that percentage spread difference. A brown discount is happening in a lot of areas. We're seeing a lot of properties because of deferred maintenance. So I want to introduce you to another economic story of being able to analyze and compare a green home to a conventional home and how you would sell that to your potential buyer or seller for that matter. So we're seeing that a lot of early adopters and late adopters are engaging in the market now. Our mid adopters are coming online now. So this is becoming more and more as critical mass evolves, and we're seeing declining regional markets and obsolescence with deferred maintenance coming online in a lot of homes right now. So the average home is, we see a lot of C4s. That means it's on the edge of deferred maintenance, major 4 to 5% in deferred maintenance cost. So there is a 3 to 8% adjustment as to the property value, in this case being downgraded, where these are being upgraded. Make sense? Okay. Next. So the residential home green economic story is the story of how these different factors play a role in the valuation and comparison of a green home. So we're going to look at what their deferred maintenance risk is over 10 years. Like I said, the deferred maintenance goes about 1% per year. If you've got a 10-year deferred maintenance timeline that they haven't done anything, any upgrades to the property, you're looking at a 4 to 5% cost to bring that property up to code and to make it, have a better life cycle in the future. We're looking at green asset costs. So average is about 50K with solar energy packages. We're seeing 50 to 100,000 is about the norm in the marketplace to get, properties that are not too far gone up to code and to make them be able to qualify for these types of programs. So the green value appreciation over 10 years is also greater than it would be for a regular conventional home. Again, these houses appreciate better. Their deferred maintenance is lower, and their energy costs are way better than what you would find in a conventional home. So over 10 years, this average homeowner is paying about 30 grand in utility bills, whereas on a green home, they're paying about 5,300. So if you factor all these things in here, then you will see, and this is one of the things that this is probably the biggest takeaway I'd like to give to you guys today as a gift, because this is the true economic story. I can't tell you how many deals have busted out because of real estate agents that don't understand the principle of this, and they'll say, "Oh, this home isn't worth it. The appraiser didn't appraise it, so we're just going to go find you a conventional home," where they're not really serving their client and their community very well, because they're not clear about the whole story, about how to show, I've got a 10-year comp over here and a brand new home or a newly retrofitted home over here. Which one is the better choice? Okay, next, please. I don't know how many of you are familiar with the Home Energy Score Index, the miles per gallon for homes that was introduced. I think I started working with HERS about 2002, I think, is when there was only like 100 people in the whole country that were doing HERS. So we have seen this economic, or what we call a monetization of appraisals, being able to be possible because of the HERS. So this is a quantified appraisal inspection where they do a blow test, or they use plans and specifications that go into a software program, and it gives you what your index is. So 100, an existing homes would be about this much, average of 100, standard new home. The Energy Star home is about 85. This would be code that was back in 2012 to 15. It's every 3 years. The International Energy Conservation Code is changed every 3 years. I believe you guys are at 2021. So you're at a HER 65 at your building code right now. So in order to get there, there are certain measures you can do, and you want to save energy before you make energy. And I say this because I can't tell you how many real estate agents call me and go, "How do I value this home? It has solar." Guys, solar is a piece of equipment. It's an HVAC system. Think of it that way. The cost of solar right now average is about $25,000. It used to be $100,000. So it's gone down dramatically. And you want to save energy in your building envelope before you add solar. Okay, so solar is not the way to quantify the value of your home. You can do a HES as well. It's the DOE's format for existing homes. It's a lot cheaper than the HERS. The HERS is average about $450 to $500 just for the initial preliminary, and it can cost upwards to over $1,000 for the actual certification and for them to do the blow door test and the infrared test. Again, it's the best bang for your buck you're ever going to get, because it actually gives you the building envelopes measurements, and it tells you what the energy savings are within dollars, so it can be monetized, which is a wonderful thing about HERS. HES is not easy to monetize yet. We're working on that. So the DOE net energy code is at around 50 to 55, depending on your climate. So all the factors that go into HERS are a pretty deep dive into the building performance of the actual home and how it relates to the climate it's in, the region it's in, what the average utility costs are per region. So it is a very well done way to be able to gauge the performance and compare the performance of a home overall. Okay, next. So I wanted to introduce you to the air policy competency ruling. Most people don't even know this exists. So when the USPAP came out, when the UAR came out, in 2009, or 2011, I'm sorry, the UAD, they came out with a new ruling that said if the appraiser is not competent or aware of energy features or anything that's different and unique about this property, we are allowed to go to a different rotation, to a different panel. So in lieu of that, we have created a national green appraisal panel now. We've got it in about 9 cities. We've got trained appraisers ready to go, and they can go in and perform and do it in a very competent way. They're extremely good, they're knowledgeable, and it's important that we have this program's and integrity of this program, it stays intact, because it's a very important differentiation between a conventional appraisal and a green appraisal valuation. So they have to have the knowledge and experience to complete the assignment competently. So you have a way to say to your lender and your buyer's lender, we are requiring, and you can put this in your contract, and I'm going to go through the contract verbiage in a little bit. Okay, next, thank you. So here's your builder contract. So a lot of our builders are using this kind of examples in there to be able to differentiate and to protect themselves from the deals busting out due to incompetent appraisers. So we are now aligning to, the buyer to choose a preferred lender following the air appraisal dependent contract. So a lot of our builders are adding this in. I wanted to point out in the corner here is the actual line item on the grid of the appraisal. So these are the energy efficiency line item is the one they would be putting the value of what that green premium is, not the value of the home, but the premium, like a swimming pool or an accessory unit or something of that matter. We're going to now have a new a line item that can add adjustments to that story as well. Next, please. So creating a winning green listing and building performance information sheet. So you need to go beyond the aesthetics and the normal thing. And I actually help a lot of realtors write their energy savings and energy features in the NMLS. So we were able to do that. And I wanted to start the conversation about the PI, the principal, interest, and energy factors, and the different costs that are associated and reductions that are associated with a green home. So we're going to go into the PI in just a minute, but we can do a HERS and a HES rating. Or in some utility, I know that you guys have a couple of different municipality energy home report systems in Oregon. So we can adapt to whatever, but most of the folks out there are using HERS as a rule for the most part. So we want to write about the features. I mean, as an example, in Florida, we have the properties there can withstand wind velocity, above like the normal, different things that we would be, the resiliency, the economic information, again, is kind of the key to the kingdom here. Okay, next. So here is the pie. So we have now a conventional home. This is actually a real case study that was next door, an Energy Star efficient home was next door, a community of homes, actually a development, to this development in Florida. So we were showing that their value of their home was, they were actually putting more down. The value was more than, there was 360,000 purchase price versus a 333 purchase price. Also, this home was a little bit bigger in the square footage, but this home was open floor plan. So everyone really liked the fact that it looked bigger, even though it really wasn't. The energy cost were $25. The cost on this home were $110. So this was the pie. So if you're looking at a comparison, this home is not that much more in value, in cost, as the conventional home, and they were getting a higher value. So the future value of their energy saving was only 12 grand, or a little under 12, and the future value was over 42,000. So we were getting an 8% green premium value. And again, these homes continue to appreciate at a better rate and have less deferred maintenance risk. So those are really the economic pieces of the story. What are you smiling about, Lorenzo?
Just the information right now is incredible, so I'm just trying to take it all in. I know I'm being quiet right now, but yeah, this is absolutely incredible what I'm seeing.
Good, good, good. I never know how it's going to be received. It's a little bit of a major deep dive here.
We already
So,
got a few questions for you afterwards too. So yeah, it's going
sure.
good.
Well, I would be shocked if y'all didn't have questions. So that's all good. So the economic analysis. So this is something we can produce. This is an actual real flyer, by the way. And it has, at the end, on the bottom of the flyer, there's contact information. The realtor is listed, listing agents, all the information, selling agent, if it's applicable, and the lender is on there. So it's a co-branded sheet that will give you, this was the development, and the price range was, between, and the energy code and rating systems were a little bit different per home, depending on the orientation. The orientation of a property and the way it sits on the property as exposure, north, south, east, west, plays a major role. So the first thing you want to do, again, save energy. You want to orient to the property. That's number one when you're building on new construction, which I'm not opposed to. If any realtors out there want to engage in doing a development and they have a developer and a builder, I'm really love those kind of projects, those small pocket communities. So anyway, here's your annual energy savings, and here's the future value. And this calculator is on my website, greenenergy.money. It's under the calculators. I think it's /calculators, and you can do the IPV is this one, and it's the incremental property value. So you can add that. You can play with the calculators. A lot of free tools are on my website, by the way. Next, please. The retrofit market. So there's over 131 million existing homes in America as of 21, and over half of them are over 30 years old. So there needs to be a lot of love. We have deferred maintenance cost, enormous infrastructure costs are ahead of us right now, and we really need to approach this. Bridges are starting to fail, roads are failing. We're having a major, buildings are falling down. I mean, there is a lot that needs to happen. So I think the real estate community, I'm calling you guys the community ambassadors, would be able to farm your neighborhoods in your different regions in a way that would be supportive of them as an education, as marketing platform, which in lieu of that, in my mind, would get you referrals. And that's a way better way than getting out there in the community, boots on the ground, than trying to just send mailings out and hope somebody engages. Anyway, it's just an idea.
Majority of homes right now, I'm forgetting what the exact NAR statistic was, but there is a lot of homes that were, I think, dated back to like the 1970s or something like that, and they are starting to be ready to, make those improvements, to start making some upgrades. So why not make those further upgrades going more green, sustainable? It'll last longer and save you more money. So I wanted to put that out there.
Well, I'm going to be doing one on retrofits, a webinar, and I would offer one to your community as well on the next round. I think it's really important. There's a lot of things you have to that go into this process. You have to identify the utilities, what their rebates are. You have to identify what the highest usage is in your communities. As an example, in Austin, we found one neighborhood that was particularly, according to the energy company, higher in energy consumption than any other neighborhood. And we targeted that neighborhood first, and it happened to be a very high-end neighborhood. So a lot of people got, made some money off of that transaction as well. It's not always, extra work. Sometimes it does. I mean, many times it pays off. In my world, it pays off just by supporting and giving back to everyone.
And also genius in terms of like figuring out where you should target for your market and wanting to get those upgrades too. Show you as like the local, realtor, that's really in-depth knowledge. So yeah. Smart.
Yeah, you guys are the ambassadors. You really are. So, okay, next. So I wanted to show you a little snapshot of what it could look like. So this would be a community neighborhood that you had, like all of them were paying. The red roofs are obviously, energy consumption homes. This is the average utility bill. We have a green upgraded home here where the cost we've quantified are $1,000 and certified that. And then we're going to show that if you figure out what their energy savings was, which is how I calculate this, is I took the average of these numbers and then I subtracted that $1,000 from it, and I came up with $2,280. Okay, now the appraiser will do this for us, but this is just a really quick way to evaluate what is it worth. For every dollar saved, it's worth $15 average. Okay, so that is a present value formula that we've been using for many years. It might be a little under that when rates are higher, and it's a little bit over that when rates are lower. But average is around $15 for every dollar saved. Okay, so that's how you know on the energy rating on the HUDs, it's going to tell you how much energy it saves. That's a quantifiable number that can be monetized now. Okay, so this would be the $34,200. Well, they spent $50K. Okay, but in this case, they're getting rebates and tax credits back on their solar equipment at 30%, and their energy efficiency bottom line on their if they're at medium income assumption would save them about $9,500 against that. So if you couple that out of the $50K, you're pretty close on par to what the value is. You rarely get dollar for dollar. Now I'm going to say that on the condition of the property and the quality of construction, you could get more upgrades. This is just the energy efficiency line item adjustment. This is how the appraisers are going to calculate it. Okay. Now there are other adjustments that can improve the value as well, but this is just one snapshot of the story. So the green premium value in this case at a $300,000 purchase price would be, $334,200 upward value. Does that make sense, Lorenzo? I'm gonna you're my check-in. It's hard to do when you've got a lot of people on. Okay,
Yeah,
next.
no problem at all.
So just to recap the contributing factors, energy cost, high performance operations can save as much as 50% more, even more than that. Most of the homes that we do that are new construction are, they're actually like, the home I just moved out of was $23 a month in energy bills monthly, including water in some cases, because we do a lot of rainwater harvesting in Texas as well. High performance buildings, energy reduction, it contributes to a carbon-based economy. That's another place we're going. We're going to a carbon-based economy, guys. Everything will be valued by your carbon footprint in our future very soon, coming to a theater now. Okay, next, please. So this was a existing home retrofit. It's a demonstration home. This guy was a contractor. He went in and bought this house in San Antonio for $325,000. The cost of construction and new energy improvements was $303,000. He got labor cost and materials total was $628,000. The appraisal came in at $680,000. Well, we're coming out of the COVID market, so reality check-in is you're going to need this feature of a green appraisal more and more in green homes as we move forward out of the COVID, mass hysteria, if you will. So he got a $550 loan amount. We were able to go almost to 90% and only put down $78,000. Okay, next, please. So we're in the middle of, we closed on the construction loan, and now we're waiting for the house to be finished so we can move it to a permanent loan. So this home was a 59, and it met the 21 code for that region. Their estimated energy savings were $1,000. Their yearly costs for this is what the HERS data tells us, by the way, not the green premium value. For some reason that got cut off, but we were able to get over about a 12% value on the green premium here. So conditioned square footage, it has all this. So we reused a lot of equipment, and they added some new things, but these were the new resiliency and high performance features. These are the kind of features you're going to be putting in your MLS, guys. This is your listing information. Now, that said, you really need to put the HERS in there, and you need to show what the economic value is. So I would say these kind of details are going to be lost in the minutia, and it's better to be able to say green premium value and different things, energy savings, resiliency. We've got a tankless water heat, things that are going to save money. You really want to feature that in your conversation with your buyers and sellers. Now, on the seller side, a lot of sellers are reluctant to do this work because they're done with the property. They just want to move on. Okay, so they're just interested in doing the cheapest, best, less is best. But a lot of times you can get the owners to facilitate and support the buyer to be able to do this story where they would pay for the features and maybe put it under their energy utility program to be able to do some of the work prior to the buyer coming in and purchasing and closing. So this guy's going to get an $8,000 rebate with his utility, and he's also getting an IRA tax credit of $2,000. Okay, next, please. These are some other recent closed high performance homes, what we just closed. This was a VA loan. We had closed an FHA loan about a month before for this builder and developer. And so we used the FHA appraisal and the data that we had collected with the HERS and all the economic reports, which, by the way, I send an economic report on every green appraisal, or we do through our system, to the appraiser. So they're getting all the numbers. They don't even have to calculate it. We make it as simple as we can, and we've streamlined the process to be plug and play where it really works in whatever region we're in, even if we're brand new to that region. We're able to know how to facilitate this. So at any rate, because VA does not allow a green panel of appraisers, and it's a long story, and that's probably never going to happen in my lifetime, we got a green premium of 1%. What's important about this story is these veterans were successful in getting their home, and most VA appraisals do not use that data. So in other words, the builder had busted out. Sorry, my brain is like not connecting to the story right now. The buyer and the seller were not able to get a green premium on the previous buyers that were VA, and the deal busted out several times. So when we came in, we were able to do the veteran program and be able to support the veteran as well as get a green premium. So that was very important. On the FHA, they got a 10% premium on the FHA appraisal. This one we just closed in recently, of course, December. So this was a rainwater harvesting only, no hookup to any other water source. And it was also a green community. I actually posted a video. It's called Terracina. It's on my website. If you want to do a tour, it's kind of an interesting project. This was in North Minnesota. It was a Fannie Mae ICF. That's insulated concrete form, net zero ready. It was a 108 utility bill nationally. And this one in Pennsylvania was a $62 a year utility bill. So remember, this is yearly. This is not monthly on the utility bill. So these are very important factors. It's possible. What I'm saying here, this whole story is that it's possible in today's market to do this and get recognized for it on the value and financially supported. Next, thank you. So here's another one. This is just a breakdown of that. It was a SIP panel, so structured insulated panels. I actually have someone in your region that is very near and dear to me that does SIP panel homes. We're working on a retrofit product right now. It's right in your backyard. So I'd like to make the introduction, when you guys are ready and you want to start mobilizing this. He's a great guy, and he's all, drink the Kool-Aid. I call it drinking the green Kool-Aid because you're going down the rabbit hole, You can't undrink it, by the way. There's no antidote. I haven't found one anyway. So I'm just saying, be careful. Sip it. Don't gulp it. Okay. So this home was certified up to 200 mile per hour for winds, fire resistancy. And, of course, and this home actually made it through the hurricane, guys, last year. And every other home was flooded or had some kind of damaged roof or whatever. This home was absolutely untouched. So just saying, we've gone through the test of time on that. Next, please. This one was I just closed this one recently. It was a pretty big home, high performance. Hers was a 7. So just to show, this was really near net zero. We say near to net zero. I don't like the comment to say this was net zero unless it truly is, because it's not net zero or it would be zero. So it's very close. Near net zero is close enough. So anyway, we closed this one recently. Okay, next. This was a renovation, a very deep dive renovation. It was 8,600 square foot. They added an addition. So this was the existing structure, and this is what they added, and they renovated this entire thing. It was very big project. So HVAC was 16 SEER. That's important. Okay, so you guys need to know about the SEER. I'd say these features would be your predominant features that you want to learn about. They put ICF, insulated concrete form roofs on. A lot of times you can do just SIP panel roofs, and that can improve the efficiency. Structured insulated panels are the bomb. They can produce homes at about a third faster than a conventional builder can, and they save a lot of money and building defects, and they're way more durable. So we just closed this one a couple weeks ago. Next, please. This was an Eastern Pennsylvania home. I use this because it was a very interesting story. This guy needed a lot of money and he couldn't get a value. And because of the loan amount, we had to do 2 appraisals. So I was a consultant on this side. I placed the loan. I found a lender, got them to do the green program with us, and we were able to facilitate getting him a very good competitive rate and a one-time close. And he's about to be finished with it. Actually, I'm going to go see this house in next month and see the final thing. But it was quite a beautiful. They used really high-tech stuff. It was off the charts with the technology. I had to sign an NDA in order to do the deal. So anyway, it was fascinating. Okay, next, please. So we have now started a webinar series, and I'm actually publishing my 2nd edition to my book, Green Energy Money. And that's going to be done in September. It's a soft launch will be in September, and the hard launch will be at EBA in October. And it's a very deep dive story, and I think a book of resources that you never really finish. It just always is iteratively improving on the story. So you can go and check out what our deliverables are and what's possible. And we'll be setting up a webinar series really soon. And please feel free to contact me anytime. I'd like to especially thank our sponsor, Security National, for supporting us to tell the story and be able to facilitate it. So one green brick at a time leads to the new carbon brick road. Thank you very much. All right.
Amazing.
She
Well,
said, I would like to hear more about that retrofit at point of sale. Well, they didn't sell it. They're keeping it. They bought it at $323,000. Let's go. Can we go back to that slide? I want to say the question on from YouTube. So if we have a solar home, can we request one of those appraisals? You don't need a green appraisal for solar. And solar is not the story. The building envelope is the story. That's what HERS is based on. We always do the HERS preliminary based on the building envelope, and then we add solar and we use that as the second baseline. Because you could put a 12 kW system on your house and get net zero, but you still have a really crappy asset and your house is still leaking and it's not functional on a performance level. You're still going to be incurring deferred maintenance. Putting solar on the home is not the story. It's not the solution at all. It's about getting the envelope and the building leakages fixed first, and then you add solar. So you always start with the envelope. That's the key to anything. Like I said, you can trick the system and put, you can spend 100 grand on solar and have net zero, but you still, like I said, don't have the correct assumptions.
and there was actually
What
another
are the
question.
9 cities with appraisers? Well, it's more than cities. I mean, San Antonio, Austin, Dallas. We can go anywhere, guys. It doesn't matter where you are. We can go in and train the appraisers. We have a system, and it works, and it's worked over and over and over on every single project we've done. So we've done Minnesota, we've done Florida, we've done, all over Michigan. I mean, I could go on and on the different cities that we've covered. So there's way more than that story. It's like we just can go anywhere.
And
How many
in
months of
terms
utility
of,
data should be collected? We don't really need utility data. If you don't want to do the HERS, that's when we use the current existing utility data. But if that's if the home has already been retrofitted. So if the home has been finished and you don't want to do a certification of the home, then you can go into the baseline. Typically, you're going to want 12 months. I mean, it's hard to look back a month and tell what the real story is, because behavior, climate, what's happening, there may be hotter or colder, inclement weather can always change that story on 1 month and not on the others. So in answer to the question, I'd say post-RIT, we do collect data pre and post when we're doing these assumptions. But again, it depends on the occupancy. If you had 4 people live in the house when you did the previous one, and then they retrofit it and sold it to 2 people, you're going to have a little bit different story, because behavior and, usage does play a role in this.
and hey, Teresa, there's actually, so one of the issues that I know I've, ran into is that, there would be a client who would want to be able to build a green home on one specific lot and wouldn't want to live in a subdivision where maybe they're adding HOAs or some other type of situation like that. Do you think that you would be able to make recommendations to different places across the US of like green builders who would be able to do individual lots, or also for some of those bigger projects?
I could, depending on the city and where our networks are located. I certainly have a pretty wide breadth of network, and I can find someone through somebody else that I know, and I'm involved with a lot of different organizations. So we can support that. Now, some regions, you're just not going to make it. There just isn't that kind of, they don't have passive house certification. Passive house is probably really big in your region because of your climate. I would think. It's a very good certification, very difficult to do, by the way. And on retrofits, I don't know that economically it'll pencil out. Again, on retrofits, what I always suggest is go with whatever the economic and financial ability of that owner is, and we can stage it. So you don't necessarily have to do it all at once. You can do the building envelope, just do the insulation and do the HVAC, and and then next you can look at replacing the roof with possibly a SIP panel roof, and then next stage of that you can continue to. I mean, houses always need love and work. There is never a home that's going to fix itself and continue to perform in the same level. However, with the new technology and the new building equipment that's out there now, we're seeing the deferred maintenance risk be diminished, considerably now compared to what it used to be.
Amazing. Thank you.
Any other questions?
Yes. How do you state the value in talking about HERS, clearly in the MLS, for example?
For every dollar saved, it's equal to at least $15. I would say if you want to be really more careful about the verbiage, between $13 and $15 per dollar saved in energy bills is typically what the value for the green premium is. Again, it's not the entire home story. It's just that energy efficiency line item, adjustment.
And there's another question here. How many months worth of utility data should be collected for a comparison of pre and post retrofit?
I already answered that.
Oh, sorry.
Yeah.
Must have spaced out on that one. Sorry.
I said, we'd need 12 months, if historically, but again, it's not a good way to gauge your energy bills in my experience, because again, you could have different occupants. You had a cold weather snap, for 3 months of that year where you didn't have it in previous years. So when we have an existing home that is green and has been certified, we will go with utility savings. But most of those people have been certified, have their HERS data. Once you do the HERS, you got your baseline forever. Like not forever, but for a good decade or more, it'll tell you what the performance and economic story of that property is.
Yeah, absolutely. Wow. Okay. Well, I believe we had answered all the questions now. So Teresa, thank you so much for being here with us today and giving us all this great info. People, please remember that this has been recorded and you can make sure to go back and rewatch it. I know for sure I will be going back and rewatching. Also, if you need to go out and reach Teresa, you can also reach her at teresa@greenenergy.money. Also, her phone number, 512-633-9455. So if you have any additional questions or you want to hear or involve her more inside of your business, please reach out to her. And also check out her website. She has a lot of great tools on there as well, greenenergy.money. So yep, there it is right there. Along with that, for the great people at eXp Realty, please do not forget we have a referral program as well. So if you're wanting to send a referral and finding a green agent for your client in another state or some other situation like that, check out the green referral map as well. Yeah, and until next time. Oh,
Thank you.
and final thought too. I do know Teresa, she has additional programs to go deeper diving into like the retrofits and, new construction homes. And if you guys are wanting to learn more about, some of the things that she's doing with some of the other projects, again, please reach out and, you can definitely get further knowledge. This is just, how did you put it, Teresa? This is just opening the door into Wonderland and then quickly shutting it.
Yes.
Can go a lot deeper. Yes.
Like I said, sip very, very lightly.
Yeah, it's a lot. It's a lot.
Okay. Well, thank you guys so much. And again, happy Earth Day, or not Earth Day. Well, the solstice, it kind of is Earth Day in a lot of ways. So appreciate the opportunity. Have a good day. Bye.
Yeah, you guys too. Take care.